Recording started. All right. How are we looking here? So there's a major difference to me, and this is actually a really interesting day because typically what we end up happening throughout the mornings is you have something that looks like this, where you have this sort of failure lower, and then what ends up happening through London is what? We come up from London, we accumulate, we manipulate, and then you get this, and that's rocket ship. That's like get out of even attempting short. This kind of follows suit with that, right up into our area of interest. Right? So, again, what are we trying to determine? We're trying to determine barbecue, and we're trying to determine if this is finished business, aren't we? So, from a higher time frame perspective, what do we need for this to be finished business down here? Right? In other words, how comfortable are we that this is done? Right? And what we need is that higher time frame failure. For example, this traded up. We got multiple swings even on our hourly here. This is the attempt back down. We would expect if it's going to fail, what happens? We get this, and that's go time. And that also signals shorts, get out of here, right? Instead, we drop back into this area. We go sideways, eventually building an SNDR where they get out of their positions, and then we rocket down, right? So that means that if we're looking at these movements, we can grab this long up. You guys see Tom do this quite often during London, right? Trading against this current objective is nonsense, isn't it? So we've got what areas? We've got our SNDR here on our lower time frame. That's a pretty good spot to expect some sort of reaction from. This is where they made a major market decision in the afternoon on the 16th, which we probably didn't hit that because we usually just trade the mornings. Do I ever backtest London? I should, but I don't trade it, so I don't backtest it. But it's not the price ever moves differently. Right? So we've left this zone, we've come back into it, cool. We're building up a barbecue this way, we're also building up a barbecue this way. So what do we follow? What are we thinking here? Or do we need more information? Anybody? Are we awake? By the way, this is one of the main reasons why we advocate, unless something is extremely clear, that we wait for 10 o'clock. Right? So we've got... actually, this was very similar if we actually look at what happened this week. Right? You've got this failure. We then base, we get our attempt back down. That just trades sideways, eventually squeezing. Right? And this is very similar price action, but you need that attempt back down. So if we go back to our chart, this is the initial attempt back down, right? From where we bounced into the intermediate time frame area. That attempted to resume the trend. We found strength in the zone, telling us higher prices. And now we need that from a higher time frame. Right? So first off, we're looking at, okay, if we're going to go higher, cool, whereabouts should we go higher from? And we would look at this zone here. We've already left and tapped back into it, both from a short term and a higher time frame. Right? We've already left this zone. We've mitigated it now. Sweeping the SNDR out. We've traded into this area. So if we go lower, there's not much left. Which doesn't necessarily mean we're going to go like this. But it does mean that A, if we're going to go lower, we're going to take everything. And B, if we're attempting to go lower and we can't, then our expectations after trading into this area of significant importance is wrong, in which case we're flying, right? So we want to form that idea again. If A, then B. And if not, then the opposite's happening and we want to be long. What I see right now is us trading into this zone. We're now trading away. I have no personal bias. I think that we definitely could trade higher if we bounce from here. Then we go. I would want to see something a little bit concrete to justify that we're heading lower. And what I would want to see that's concrete would be, ideally we sweep this low and then we get some major failure higher. And yeah, we can probably justify, well, maybe it'll stop here. Whatever. If we certainly fail this internal 5-minute low, right, we sweep in above this candle, then we're in major trouble from a bullish side. As we just tried validating a 5-minute low and got miserably rejected, which it looks, at least at the interim right now, that this is go time. Right? Very aggressive short idea, giving power from the SNDR rejection. We've now liquidated this area and the manipulation leg, trading back in, and we're leaving. Right? So that's your kind of your 5-minute failure leading into this. And this is going to be very interesting to watch. Pretty much, right? Unless there's major recovery in this, or at least sideways and major issues, as in we would need sort of your intermediate time frame double bottom here, then we can squeeze. But as it stands right now, I'm looking that this low is probably on the menu. Definitely clear out these liquidity. And I think we're taking these and then these if we really get going here, right? And you're seeing the urgency following suit. Right? So we'll see if we get some form of ability to get involved, but and by the way, when you're looking at this and you're seeing that this is your intermediate time frame, right? What I mean by that is that you get your lower time frame here when you get this trade back up. Trades back up into your prior zone, right? You've got this internal structure going on here, which is doing what? It's facilitating the move to the manipulation leg. We finally take it, and then what happens? We trade back in. This is your intermediate time frame move after the order flow is broken. So you got lower time frame structure. Now you have your intermediate time frame structure, right? Trading back up to here and now leaving. And one of the major questions that I would recommend you guys looking through, because Vandit asked a very, very cool question in Premium, where we were talking about these massive unload days. And it's cool being like, I want to get involved here and I want to hold for 400 points. What a concept. Love it. Right? And the way you get involved in those is it's kind of, we're not expecting in massive movement to catch the top that's going to run it all the way back. And I know that there's people out there that look at that and whatnot, but what we can do in this instance is you've got your higher time frame movement up, cool, and then we break, and now we're trading back down to here. So we've achieved that intermediate time frame objective, and we trade back up, and now we fail, and now our position is evolving from that short-term scalp based off of the order flow, and we're reacting to what price is telling us. And now we go, well, this is actually not only breaking lower time frame structure, but it's breaking intermediate time frame structure. This has the possibility of being a higher time frame movement now, rather than a retracement. But the position's evolving as we're inside of it. And that's an extremely advanced way of looking at it. And there was actually a 5-minute break of structure on Friday that led to that movement back up. And I personally was long, and the reason is because I missed that 5-minute break of structure. And that's not a, whatever. I mean, we look at structure as paramount for that exact reason, so that we're not long against something that has the possibility of dying, which is annoying, right? But my point is that we like to react what price is telling us rather than, I should have held this. Well, maybe. But we have to have structural and consistent reasons to do so. Otherwise, it's just, I was in at 14.25 and now look at it. Right? When the initial idea was to maybe trade back down just to here. And that would have been a valid trade idea because we're in bullish structure. Right? That doesn't mean we can't short here and then go, well, unless I get taken out, that I'm going to have a 100-point trade or a 20-point loss. And if you're right, 20%, 30% of the time, you're going to be profitable. That's fine too. Now we're breaking this low. Here's our 5-minute time frame. Right? So far, so good. Makes sense to everybody, I'm sure. What happens if we fail to validate this low here? We've got a new 15-minute candle. That's a pretty hard smack. At least so far. And by the way, this is something as well. There was somebody in our group. Actually, I'm going to make that snap. No real retracements, at least so far, to be able to get involved. I need to see some sort of internal failure. There was somebody in our group that was talking about SNDRs and whatnot. And usually you'll see these things sort of line up. So for example, we've got some failure here. Nice little smiley face trading back up. We would have ideally wanted to see what? This sweep and fail this. And now you have this retracement that we're waiting for inside of your area of interest, right? Lots of volume took place in here. And then a major decision from this fractal to really send us lower. But no trade. Now, can you justify selling here? I suppose you probably could. Right? Do you think people did? Probably. Would it have been a valid trade idea? Momentum-wise, yes. I mean, if we're sweeping and failing this, and you got a change in order flow going on, you could also justify this, which is why we look at intermediate time frame narrative. right? We had major failure here. We've got many reasons to go lower until proven otherwise. So until that 5-minute validates, if this push up validated the 5-minute low, now you're looking for this. If this push up cannot validate that 5-minute low, it sweeps, it fails, it comes back in, we don't look for this. That's when you get clapped on the wombo combo. And then you're like, well, I don't know how you're getting payouts, man. I can't make the system work. Well, no, you can't. The system gets its power from everything that goes on. Everything that goes on. And it works flawlessly. Believe me. Well, don't believe me. Believe the payouts. Right? So, what do we got going on here? Still no trades. 949. Nasty business. Straight down so far. This is where we get a little bit fun, don't we? We start looking at projections. This will probably be a 1-minute projection, would be my guess. Now, if we're expecting this to be a retracement versus continuation, you would use different legs, right? But because our direction is actually higher time frame bearish, we would use the manipulation leg. That's important. See, we draw it. I would say it's manipulation. You probably look at this. Oh my goodness. This silly thing. Do I even have one? I don't. Oh my God. What are we looking at? 200? No, it'll be 300, wouldn't it? Should not be doing this in the middle of backtesting. There's your 2.5, or 2 and 2.5 probably. All right, so there's one. Actually, that doesn't work, does it? That'll be 250. Let's go 250. That'll be the midpoint of that one, and then we'll go 450. And that'll be the midpoint of the next one. Actually, 4.25. 2.25. 425. Save, default, apply. There you are. Happy days. 954. But heavily bearish. What do we get? Lots of buying went on here. Nice little sweep and fail again. For right underneath the lows. Oh, this is an extension. The OTE is the retracement. It's a little bit different when we use our pocket. So let's see what goes on here. What do you guys think? Should we do a little bit of scalping, or should we do a longer term trade? Who's feeling extremely disciplined? And by the way, 70 to 80% of days will be mean reversion. So it means that we can look for that higher probability move. Oh, we got equal lows coming in here. Cute. Probably back up to this. last structural zone. This candle closed underneath this one, making this a valid area of interest. If we're looking at you've got that, right? Which might facilitate the movement back down. If we're really going to retrace, I think we trade back up into this area of interest. Longer, bigger P&L. All right, man. All right. Let's see what we got here. We've got, that's nasty. That's nasty. What's the likelihood that we take this high if it's a higher time frame move? This one here. Very high. In a higher time frame move. Our expectation would be, so that gives us more clarity. For example, if we trade back up, let's say to the open of it, right, 47.25, and we start failing, then we're really in a higher time frame move, which means we definitely take this low. Which means what? It means that, let's say hypothetically we will look short, right? We don't want to take 10 points of this, do we? Not at all. Is it still valid to be looking short, or should we wait for a larger retracement back up? Or would you guys rather wait for that juicy long that will likely eventually come, whether we take one of these lows, the higher time frame one, whatever? I bet you Mikey is. Trading against this? Fair enough. But you guys have to find your edge too, right? Personally, I think the higher probability until we finalize is short, if that's not something you guys are comfortable seeing. And by the way, question for all of you. Is trading the short side structurally and order flow wise the same as trading the long side? Or does it move and trade differently? If it's different, different how? Getting some answers, okay? Everybody else just watching, nervous to come up with some answer. The short side's very different. The short side's very different in terms of an order flow perspective. And the reason is because the markets are predominantly bullish. The markets are predominantly bullish. So it's almost like everybody wants to be long and then, oh, it's not ready yet, so everybody panics and gets out of their positions. It's not necessarily faster, but as you guys have seen, there's been days where the long side just squeezes shorts, and that's extremely violent. For example, here, bearish trend, bang, right? You'll see that when buying occurs, buying kind of comes in an accumulation. The accumulation of shorts isn't the same. It's more of a gradual exit of positions, right? That then leads to retail panic. Whereas buying, you typically see the first go like this as they accumulate. And then what happens? Boom! And then you get your move. Right? It's a little bit different. Which gives a lot of purpose to our discussion of kind of where lethargic movement, we should be getting very excited for the prospect of a very good long trade coming out at some point. And if that's lethargic, then we expect more downside. Fine. Right? We're seeing this. Obviously, there's nothing really giving us a lot of those vibes. And we'll see what ends up happening here. Right? So until we get that 5 minute, and that might mean that you avoid the short side entirely, and that's fine too. Right? That's fine too. Right? So this will likely come back down. You've got these juicy equal lows here. Eventually we will run all of this, would be my guess. Right? Now we're seeing a lot of buying. How eager do you think people will be, especially if this imbalance gets respected? Very. But again, what's our target? Our target is that 5 minute high. Right there. With a lot of selling that came in. We've now swept above this manipulation leg and failed. We couldn't break it. If we broke it, traded back in, same sort of thing. We validated a low, yes. This will be very interesting to see what ends up happening here. So we're formulating ideas where we've got our 5 minute high. Get rid of that now. Always said that was taken. Got our 5 minute high. What are the two options that we have if we're looking short? First off, should we be looking short or long? Personally, I would avoid these equal lows until we get some major 5 minute closure. Okay, so we're looking short. Cool. What are our two avenues for short? We're looking for either a sweep of this, or what else are we looking for? Okay, what else? Okay, 10 a.m., yikes. How about an internal failure? Okay. Fair. Formed a valid high, very good. Oh, is it not going to give it to me? It might not. What am I in? 25 half. Sweeping and failing our last structural bearish candle into a retracement. Not quite as high as I wanted it, in fairness. Could let this go break even. I want to see what happens with this low. Okay, so let's pause. When we talk about outcome of trades, we talk about focusing on process. So what invalidates this trade? If it trades above here, does that invalidate this trade? Right? In theory, where should my stop be? It should be above this, shouldn't it? In theory. That's my invalidation point. We've now created a break in order flow. And there's about 5, maybe 6 different ways this can operate. We've now got a body closure underneath this, but is that valid? No. Why? Because we couldn't validate a low internally here. So we know we have no internal structure. Is that important? Yes. Why? Because we don't want internal structure. We want this to be failure to achieve the 5-minute, which does what? Tells us that we're still in higher time frame direction down. That's a good place to be, right? We want to be part of the higher time frame delivery. Is this an awful entry? Probably. I think it would be much better to have that short up in here, right? Or at least inside of this. Now, I could have argued to be in the mid to high 30s. And had this traded into the pocket, I would have been in. Why? Because we validated a high after failing to deal with our 5-minute. Cool. Right? Now, this ends up being a 1-to-1, essentially. Right? We're risking what? 18 points? To make about 18 points? And in reality, this should actually go a little bit further. Probably quite a bit further. Right? Cool. My point is that, as you guys know, I'm more of the opinion, at least for scaling. Growing accounts, probably a little bit different. You might not consider this. You might take something in here or whatever, but if we're looking for realistic type account growth until your execution gets better and you're able to hit this here, there's multiple different ways this can operate. Suggest that it fails here in 1 second and we close above this low at 16. What do we expect to happen? We expect it to trade back up. Why? Because it's telling us this might not be ready yet. It very well could close here and continue. That's also a possibility. But if we're reading price and we want to align ourselves with validations, very well could sweep and fail up in here as well. It could do this, and then we get our third pattern. It could do a whole number of things. My point is that we want to look at whereabouts this is telling us that it wants to go higher. Right? So let's see where this candle closes. Closes inside. Cool. Now, this is if you're trading aggressively, you're probably flat here. If you're scalping and maybe you're in from a little bit higher than this and you take your 10, 20 points, whatever, if that's your aggressive trading, the market is telling us right now that it might want to go higher or not, right? My point is that we want to be based off of this order flow and the failure internally. Even if you don't hit that short, guess what? You're not long in here, getting clapped, and then the movement maybe comes. But this change in order flow tells us lower. All right, coupled with the internal failure and the higher time frame delivery. Should I be short again? Who would be? Okay, good. Good. Now, does that mean we want to be long? Right now? Still too early. We get very in depth in this, don't we? What's our predominant piece of information that has not been fulfilled yet? The 5-minute high. Now we can speculate this being a valid area of interest. We've now taken a major liquidity sweep. We've got some inducement going on here. Right? If we're going to hit this aggressively, fine. And if you're in from like here or anywhere underneath it, cool. The RCK special. But that's the aggressive trade. If we're looking for conservative and growing our accounts and getting our first payouts, this is not a trade you should take unless you're very confident you've backtested a lot on your aggressive trading model. Right? You're trading against the trend, and we have an internal failure that's failed to even attempt a 5-minute high, which tells us this is higher time frame order flow still until it tells us otherwise. That's our information. So there is no conservative trade. This closes here, not relevant. You got a 1-minute valid low, sure. All this failure, that's step one, telling us that it should go higher. We don't know where to go higher. We could look at this. We could look at this. We could look right here and it could blast down still. We don't know. Right? By all accounts, this could very well be a short setup. Do I think that I want to short into this? No, I don't. Does that mean that it can't go down any further? No, it cannot. And this is very important. And don't think that I'm immune to this stuff either. You guys saw me, I think, get, what was it, Monday? It was Monday. I took 2 immediate losses shorting against something exactly like this in reverse. Now, are we gearing up for a reversal? Forget looking at valid lows and highs and whatever else. How many attempts of reversing this trend do we have? Definitely slowing down. Right? Is it ready yet? No. So do we want to go long anywhere in here? Or underneath this low? No. No, we don't. What time are we looking at a reversal? About 10 to 15 minutes from now. Maybe even 20. We've got this low here at 87.5. Let's mark it up. Oh my God. I despise Ninja. What do you guys think of my low a day? There we go. Whoop! Starting to get a little bit of movement. What time is it at, though? Right now, this is our 5 minute. You will drastically increase your win rate by waiting for a 5 minute sweep, especially on these kind of moves. Had this candle closed bearish, we would be looking at this one for a movement back up. Otherwise, this is a drive. Wherever this closes, now we can look for a potential movement. Now, we haven't taken that low. What a schmuck. This is teasing us. Where are my aggressive traders at? Anybody considering long? Even for a scalp? Possibly back to the range. Bet you Tom's in. Bingo card. For waiting for a high probability entry, you're waiting for the 5 minute sweep. Not till I get a valid low, fair. This PA is stay out of trouble PA, especially if you're more adept of being in on the long side. Stay out of trouble. Here's your 5 minute open. Your 5 minute open. Right? Probably drives higher into this area of interest here. Right? If you're looking at conservative SNDR, you're looking at this area there. Right? That was your last sort of rally when selling came in. Right? This area, that high of 25.5 might get liquidated, might not. Maybe. First trade, scalp. Still haven't taken this higher time frame objective. Are we in higher time frame order flow? Has that changed? No. No, it has not. Where's our 5 minute candle now? Right? So not looking at that one anymore. Not looking up here. Not looking at that. Patience. Patience pays. Patience pays, right? Million other places trade lower time frame, 5, 15 second. They get wrecked. Tom's in the bottom tick. Yeah, probably. There's your 5 minute. Coinciding with your SNDR. No bueno so far. And death. Probably chops around. And what are we building? We built an intermediate. Now we're building a lower time frame. Right? No, what, we take one trade? One short so far? What would be a beautiful idea for an SNDR entry if we're going to trade aggressively? Can we still justify a short? Or are probabilities going lower? What do you guys think? Is this not the same idea as this? With a higher time frame objective that has not been hit yet? Mikey's probably shaking his head like, oh my God, man. Just wait for the long. Can't help it, dude. Can't help it. Lethargic movement. Lethargic movement. SNDR created? Where are my Amazon earnings at? What gives this power isn't necessarily this candle or this bearish move. It's that we're creating an SNDR because we have a higher time frame objective supported by the higher time frame order flow that's occurring here. The internal failure instead of trading up to the 5-minute high. The attempts of rallying which aren't ready yet. This movement which wasn't ready yet. Could it take this high? Yeah, probably. I probably should have my stop there. Will I scale into this position? No, I'm either right or I'm wrong. And if I'm wrong, I'm going to be wrong in a very interesting fashion. But we are trading with order flow until we're proven otherwise. You get a strong movement up, and then what was the response? It's not the move. Everybody else is going long in here. It's the response. The response. The response. This trades back up into here, then I can consider adding. I'm not adding front side. Target filled. Why? Higher time frame objective. And now, I don't care if this does want to go lower to the 60s to wherever our 4 extension was, 75. Right? Let's draw a little rectangle for it. God. Ninja Trader. Mother of mercy. So let's say we got that. We're not going to treat this as gospel. We're just eyeballing this, right? But my point is that now objective's done. Now the objective's done. Am I taking a trade above this, even if it fails this candle? No. No, I'm not. In fact, I don't care what it looks like now. There will be no shorts from me. There will be no shorts from me. Higher time frame order flow, higher time frame objective. Done. Right? You could argue, and I'm sure many traders that are perhaps better than us have been shorting every scalp on the way down until that's hit. Maybe. Hey, Ellis. Good to see you, man. He's already gone. Cool. Anybody long? Better not. I can understand it. You better not. You got 40 seconds. We're doing this on 2x. That's right. Right? You're seeing this. Is this higher time frame rallying? No. It very well could do this. Blast up to your SNDR. That will be a higher time frame potential sponsorship. We would still look for that sweep. Still look for that sweep. Here she comes, right on cue, 10:30. Pile in, Wieland, let's go. No. No. Not yet. Not yet. And if it runs, guess what? Then we react to what price is telling us. If we get a snap, guess what? Thank you very much. We'll take it. Right? We don't need to panic. We don't need to panic. Where was that wombo? What wombo? We don't have this. So that's these are extensions. We'll go into a little bit of that. We're getting a lot of requests for. That was if we get a higher time frame break of order flow, right? If the higher time frame tells us it's go time, then we want to ride that coast to coast truck, right? We want to ride that. Otherwise, we're looking at this. $10.34. Well, we're kind of looking like just adding different things, right, to create more of a systematic for everybody, right? Because not everybody's a scalper. You guys like taking some higher time frame movements. You guys like trading wherever this ends up going, right? Maybe you get a change in order flow that goes on, right? That would be ideal. Maybe a validation and then some sort of failure and then when it's go time. Again, we're getting deep in attempts of reversing this trend. Right? Forget this area. Projections. Wherever this is. I can probably draw it a lot better on TradingView. Right? But my point is that 1, 2, 3, 4. This will be number 5. Structural or not, we're looking at attempts to reverse this trend, which is the whole point of counting swings in the first place. So let's see what we got here. Speaking of 5s. How are we looking here, lads? 62.5, 62. Maybe we missed it. It's a little violent, of course, but let's actually snap that. It's very possible that we have already missed our entry. Now, given how violent this candle was and the selling, we might get a sweep of this one as well. It would be great if we had this spike down. We've now got this high. Maybe that high puts in a new low. Wouldn't that be nice? Why? We've got a 15-minute sweep. Maybe. Well, actually, the 15-minute is actually up here. We're inside of the 15-minute sweep if it wants to sweep. Right? So we're looking at these changes in order flow. Now, the problem that we have with this is that we needed the sweep. The sweep didn't end up sweeping. In fact, we got a dagger that went right through. But if we had this occur after 10:30, then we would have been more interested in this happening up here. Right? Instead, we got our 15-minute sweep that occurred here. Right? If we look at this. Currently in this right now. Cool. Right? But all of this happened after 10:30. Not good. Because we wanted that 5-minute sweep, which ended up just knifing through. We're getting the same sort of thing down here, and we've got a pretty good objective in trading back up to this zone. Right? So we're stacking confluences. We've got 5 swings. We've got a 5-minute sweep. I think we're a little early yet from order flow, and that's just based off of seeing this in a sharp downtrend. But we've now got this high. So multiple ways of playing this. Not wild about this stab, but we are speeding up. You guys can kind of see that we're speeding up even on this, let alone actually watching the tape or anything like that. Starting to get excited about a reversal. If you're aggressive, you're already in. I'm going to wait for a conservative entry if it offers. But you're seeing the difference in the order flow. You see how violent it is, how urgent it is. This should validate if we're right. Now, I'm not in yet, but this should validate. There's your break in order flow above this high and the validation of the low. Get back down there. If you're aggressively in, you're very happy. You got your validation. That's your first thing. We now need the attempt to continue the bearish trend that gets humiliated. Where's our 5-minute high? We're looking for your first immediate target. You've got an SNDR in here, and you've got this 5-minute high. Similar to this, our expectation is higher until we get proven otherwise. Right? I'll show you in a sec. I want to be long in this. Right? 20-point stop, fine. What did we say with the 5-minute high? We've got the SNDR here, cool. Let's move that for right now, and we'll see if we get wrecked on the movement down or not. But we validated, and we've got our sweep. I want to be long in this because we've taken our objective, and we're 5. This will be the 5th attempt of continuing this trend. The important thing is that this closed underneath that, so we're not in a range of this candle, which means that this isn't dangerous. Right? We want to be long in here because we've now got that change, that break. We got our 5-minute here. Where's that high? It is there. Cool. 904 half. Cool. Happy days. Okay, so we want to be long. We're getting this. What else do we have? We have a failure. We're failing underneath this candle, which isn't even the structural one. In fact, we broke order flow on this one and validated. We haven't even been able to retest that low, which is valid. Right? If we fail to retest that low, that's very strong. If we sweep and fail it, that's still valid. This is our last structural bullish candle. Right? So let's see if we can spot. Ideally, I want to see some strong follow through from this. What does it look like on the 15-second? Just for you while we're watching this unfold. Right? SNDR breaks or validates, right? These lower time frame SNDRs, they validate 1-minute high. Same thing as our 1-minute structure. We then trade back into it. Breaking structure, come back down, double bottom, leading to what? Should be a higher time frame move. I heard that somewhere, but I don't really know what it means. I'll have to go on Twitter and see what the experts say. Lots of selling pressure, lots of buying pressure. We're definitely not out of the woods yet. I'm liking the inability for price to go lower here. Why? Very different change in personality than what occurred here. The movements back down after bullish movement were violent. And now we've got this. Now we've got this. I'm liking the manipulation. I think once we break above here, we've got two different ways. Either we're wrong and we take a 14-point stop, right? Or we close up here and then we validate a high, in which case we may be going break even. We might take one off at the SNDR area, whatever. This is all best case scenario. Worst case scenario is that our idea is just not ready yet or wrong and it wants to sweep out again. In which case I definitely don't want to be long because we're trading this based off the 5-minute sweep. And if we're wrong with the 5-minute trading up to that high, we don't want to be holding for the unwind that continues. I do think we're really ready for a rally here. And again, we've got internal failure here, right? So this is really this failure and then channeling down. We've got a lot of liquidity starting with probably that high for sure. That high for sure. And the reason that I mentioned that high is because we swept and took liquidity above here. We swept and took liquidity above here. So unless we want to really run on a higher time frame, this should be the target. Right? 23s. Okay, happy days. Should we go break even? If not, why not? We don't want it to come back, okay? Is it feasible to suggest it might? Yes, it is. Right? We've now built consolidation. There's a lot of volume here. This could trade back down into the 70s or even a little bit lower and then run. We've swept this. I don't expect it to trade back down to this low, but it's very possible that it trades down into this consolidation here. Should it sweep this? No, it should not. Right? I wouldn't want it to trade below this. That's for sure. That is for sure on that for sure. Now, if this is strong, this movement, right? Ideally, this even closes bullish, let alone anything else. Why? What are we building? Correct. SNDR to do what? What's its significance? Correct. SNDR to break SNDR. Is this conservative? Probably. Let's get rid of this line. That line's done. That's done. That's done. I'm going to leave that on there. Is this too conservative? Raise TP to 920. Listen to Vandit. All right. I think I'm going to take one off here regardless. I think that's valid. Assuming we get this SNDR sweep, even if it wants to fail here and come back down violently. 904.5. I like those equal highs from earlier. Equal highs, equal highs. These ones, that's shelf. Or are you talking about this? There's that. Okay, one off. Happy days. Let's 75.25. Going for broke. Bull needs a pool table. Pool table fund. Let's go. Happy days. Now, those of you guys that are growing accounts, show of hands who's working on their first payout of the year right now. Okay. Cool. Cool, cool, cool. Cool, 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 cool. Cool, cool, cool. Should we be break even if we're working on our first payout of the year? Probably trailing. So at minimum, you don't want to be giving back anything, do we? Now, this could run to this. And that's happy days. This very well could come back down, stop us out, right? Come back down, right? If it sweeps above this, comes back down, stops us out, runs, comes back down as we create structure, blah, 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 blah. My point is that we don't need to be perfect, as I've shown you guys explicitly with the live trading, right? In order to get 5K, 6K every 2 weeks per account, right? We don't need to be perfect, but what we do need is, number one, when we're right, we allow those trades to run. And if we were wrong, we take our hit. We don't add, and now we have to focus on staying out of trouble and allowing these trades to work within reason. If you're working on your payout, assuming nobody in here has a strategy where they're like, I need to be 4-1 and I'm going to win 25% of the time. And now, if that's the case, you really need to make sure that those winners are taking every point of profit that you can when they work. But if we're taking these moves based off of candle range theory and trading similar to bullpen style with wombos and whatever else, if this 5-minute fails, we definitely want to be out sooner than later. Do we expect it to fail? No. No, we don't. There's no structure here. This should be gone. But my point is that when you're building your accounts, we don't want to allow it that opportunity. Right? We don't want to allow it that opportunity. Here's your 15-minute time frame. You got 8 minutes. Ideally, we close above 904 half. If we don't, we come back down. Right? We want to be relentlessly protective of capital. So we'll revisit the 15 because, again, we trade based off the 1, the 5, and the 15. The 1-minute failure leading to a 5-minute. If the 5-minute fails, we keep going lower. Right? Despite what the 1 minute's telling us. Right? The 5-minute validates, but we fail the 15. Still dangerous. Right? Assuming we don't break 5-minute structure, in which case we have nothing. This could run all the way up to here or here to our target, actually. Happy days. Without breaking 5-minute structure. We've already broken intermediate structure coming down and taking the objective. Right? This is the main area we're looking at. Why? This was our intermediate SNDR that functioned this leg down that broke. And that coincides with our 15-minute high. Now, we don't need to be perfect. We don't need to have analysis 6 ways to Sunday with every single high and low. But it will drastically increase your probability of success. Right? If you're looking at this, you're looking at this area in here, which was responsible for major price action. Or we're following our lows up on our lower time frame. Now we're ready for anything. Right? Personally, I think this continues higher. I think we definitely take this 23 high. I'd be shocked if we didn't. You'll notice I still haven't moved my stop. Be honest, if you're looking at this rather than this, you've now identified something that needs to change. This closes inside of here. This is in danger. But again, I want to be trailing this aggressively. Should we move it up? Yes. Right? Why? Because we're not trying to cancel the monster. I think this still does run up. And there's the pretty decent probability that this trades back in and continues on. But we're growing accounts here. And I'm sure there'll be another opportunity of getting in. I'm looking at this as being a little bit overextended. If we continue with our higher time frame price movement, right? That high being 2025, that high being 2050. In reality, we still have our lower time frame order flow here. There it goes. Let's see how silly we look. Still haven't taken that 23 high. Right? If we're looking Wombo, we've got a 5-minute valid low now, I think. 57, we should. Yep, we do. Beautiful. Area of interest. Right back at the low. You know where I'm looking long. I think that's from that low there that that really pushed above and validated in here. You could argue from the SNDR. I think that's valid as well. I think that's valid as well. How happy are we that we took our profits very quick? Or at least trailed aggressively while we learn and build our accounts? Happy days. Is this a high probability? I don't think so. I don't think so. Okay. Who's still interested long? Show of hands. Where have we seen this before? The 1, the 5, the 15, and all of this stuff. Right? Assuming we don't have an influx of buying of 10 points. Right? Can this trade work out? A sweep of the 5. That high actually did sweep. We could be looking at the low, which just got swept. We've got our Wombo combo here with the 5. Aligning with our SNDR that broke. Right? And at 11 o'clock. We don't want to see a valid eye on the 5-minute. That's very true. That's very, very true. And yet, we did. Therefore, we could see a bounce. That is very decent probability. But we got a 5-minute valid high, and we have a 15-minute failure. Now, we're inside of our SNDR, the broke SNDR. I think if we sweep probably this low at 78, you might see some relief. I think people will go long in this. Right? No structure and no structure. Violent. What are we thinking? What are we thinking? So let's pause. Making you guys work this morning, aren't I? A, if it trades back up, or B, or both. We're looking short. How nasty is that failure under the S&DR out of 10? You mean this one? Or this? True. True. The question is, location and entry come third and fourth. Why? Because we want structure and narrative first, don't we? Right? Are we in bearish structure on the 5 minute or bullish structure on the 5 minute? Okay. That's right. If we formed a valid high here on the 5, or sorry, if we formed, say, a valid high here on the 5, you might have a different theory. This has no structure. We're still bearish. Do we have trouble concerns here? I think so. I would have loved a 15-minute valid low with 5-minute bullish structure. Now I can start looking for confirmations. Right? We've taken an objective. We closed well below it. We're trading back in, and so far, not happy days yet. Right? We had a very real possibility of doing that here. Not very happy. That doesn't discount that we've got these areas that people will look to trade from. And now we start forecasting, don't we? Based off of structure and narrative. If we're going to go short, we're not short in here. For this. That's a low probability event. Could that happen? Of course it could happen. But our expectations of price would be this trades back up and then maybe continues down to here, which then fails, which then so on and so forth. If, right? And now from a lower time frame, what are we looking at? If we're going to go up, we're sweeping and failing, right? We've got an imbalance now. That sweeps. If this fails here, now we get our move, right? And then what happens? Should this be violent? Probably. We might get something like that. Why? Because now it's our second distribution. This violent would occur if there's lethargic move. Well, that's actually not even true. You might get lethargic movement, but in reality, we would want this to be violent. And the personality is that we're getting violent, 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 violent. Yeah. Change in order flow up here would be nice. That'd be nice. I think it's highly unlikely if this is going to continue because we're not seeing anything to support that as well. We're getting a violent first leg that shows initiative selling. Right? Now, can we make the argument for higher prices if we look at lower time frame structure? Is there a lot of buying going on? Probably. So what's that possibly going to create? Or we at least need to be aware of the possibility. Starts with an R, ends in ange, right? So we either get this violent movement down, in which case the lows get taken very, very quickly. If we don't, then we probably enter a range. We maybe come up, fail this high, right? Then we've got a nice internal failure. Ideally, we build an SNDR here. If we fail it, then we've got this. And that would be a valid short idea. That would be a very safe short idea as well. Right? We'll see what we get here. Okay? First order of business is this imbalance. If we break this imbalance, we run to here. Everybody buying this SNDR, quite happy. There's a scalp for this low. Or clapped immediately. We're going to find out. Bang. Thank you. Whoop. Ooh, that's nasty. Let's see if that recovers or not. Lots of selling. Lots of selling. See if it overpowers it or not. I think this is going to move up to this at least, but yeah, I did miss that. Okay, that's all right. Wasn't wild or terribly interested in going long even in the location, but I didn't like the second failure shoving down. Probably passed out on 20 points or there, so. Yeah, look at you. Legend. There's your 5. That's still yuck. Right? This is what's known as a bearish engulfing. You guys probably see this sort of stuff a little bit more often now than prior to, right? So this essentially traded up and then validated here. So we would look at the midpoint of this, which kind of aligns with our Wombo as well. Just an added confluence of the short possibility here. I know Mikey's salivating. Oh! That's a little annoying. I don't think I could justify hitting anything aggressively here. Where's that 21 EMA at? Right beside the email that I've blown accounts. That's not true, actually. I think a lot of people trade EMA strategies properly, and it can be very, very powerful, but just not my thing. 20 EMA on the ES is actually quite powerful. I use that for a significant portion of time. Oh, heartbreaking. Heartbreaking. Probably should have had it drawn from here, but I like the right major decision made. But I like the confluence of this candle here, right? Which would have been up a little bit higher at 905, 907 or something like that. Look at this. Look at this. Can't justify it. Can't justify long. Can't justify shorting here for sure. Mm, 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 mm. Mm, mm, mm. Oof. Okay. Yeah, I had this drawn up here, right? And I was pretty confident in that because it aligned with the inverse here and the midpoint. Just didn't quite tap me in. So um yeah, can't really justify it, right? I'm not wild about this. Not wild about this. Do we have a valid? We have a valid swing here, I suppose. We've now closed. This is internal structure, though. So I definitely think we're in a bit of a higher time frame range. I would be very interested in buying anything underneath this low if it came to that. Assuming that we don't get anything else. And I think that that would be a sweet model trade, personally, with this being a range. And that would be good for 10, 15 points or so. Right? And that's because we now have internal structure forming. That's here. It's very, very different than something here, right? Like this is obviously a range. We swept and failed above. We swept and failed below, leading to up and down. But there was no validations of anything here internally. Right? Our first valid high came here, and then we didn't validate a low until here. This is different. We've now got a valid low and a valid high and now a valid low again. I don't think we break this, but again, we're now operating on liquidity principles and not structure. Not structure. This is stay out. This is definitely stay out. Especially if you take longer trades, this is when we stay out of here. Right? These are low probability type conditions. We want to see urgency that's then sustained. Right? People will be buying underneath this. People will be selling any rally. You're seeing that. Spike, spike, spike. Right? They're buying underneath. They're buying underneath. But trading at the mid 80s, where we're at right now, foolishness. Yes. Yes, this we didn't want to see validated if we were looking at very higher prices. Which tells me that we're sideways to down. Sideways to down. Guaranteed I would be red about $1,000 a year and a half ago. Guaranteed. 2 years ago. Probably actually 2.5 now. I gotta stop saying year and a half. Can't believe it's been that long since I made the jump. Quick. That closes bearish. We take this one. You guys want to know how to trade in ranges? This is how you trade in ranges. Right? You wait. You wait, you wait, you wait. And you might get clapped. The whole point of scalping is putting yourselves in decent probability conditions. And then more trades than you typically would. I probably should have hit that. I think maybe maybe it blipped on 2x, who knows? I would not be selling here, no. No, I would not. Whoa. 20 seconds. Oof. Ah! I missed it. Yikes. How scary is this? How scary is this? Right back to the middle of the range. Target filled. Not hunting for anything major, but this is your third push down and some major buying came in. This traded down and then traded through. So I expected it might not be ready yet. Trading back into the middle of the range. Right? Looking for the exact same thing short, by the way. Where are we trading? Probably above these. 94, 94.25. Right? Do we take this one? I don't think so. This actually put in a valid movement. So you got sort of your internal channel going on here as well. You feel me? You feel me? Right? But we're not looking at this high. Who cares about that? We're looking at where the liquidity is. 94.25. Just took it. Happy days, happy days, happy days. Now again, my personal way of trading aggressively with narrative and structure, same sort of thing. We sweep above this high, we trade back down through this candle. And I either get wrecked or I trade back into the middle of the range. That was an awful execution, probably because it's on 2x. Right? I'm going to actually tighten this up, be underneath this. Or we get wrecked. Happy days. Happy days, happy days, happy days. Could sweep and fail this, but candle range theory in bearish momentum. Even if we're wrong, we typically will get something like this. Right? Now we're getting a little bit of follow through now. I'm going to probably avoid anything now. This is a bit of a change in personality. We're clearing out liquidity on both sides. We're gearing for a movement. Gearing for a movement. Right? So I'm going to stay out of trouble with any longs in here now. Stay out of trouble with any longs in here now. Right? Everything mitigated. Everything. Which means if we flip bullish, then we clear out all of this. Happy days. Yeah, I mean, you're looking at expectancy over the month. Expectancy over the month, right? Or week. Week turns into month, similar how the 5 minute turns into the 15, so on and so on and so on. Right? We take what's handed to us. But it's important to know in these range-bound conditions, we're not looking at valid highs, valid lows, and all of that stuff because we're in a range. We're looking at where the liquidity is. And these trades don't have to be... all right, man. These trades... well, actually, both of them. These trades don't have to be your system. You could be waiting for price to tip its hand one way or the other. And in fact, let's speed this up a little bit because we're getting a little on in our day. Do we take this low and continue? Is that our expectation? I think right now that's our expectation. If only because of the follow through that happened here. There goes that low. We buying underneath this 56? Do we get wrecked? Do we even get it? My goodness. So what are we thinking? 15-minute low? What just happened? Anything significant that we would trade based off of anyway? Okay. Okay. So we're still expecting lower. Right? Want to see that low swept? Okay. Any other speculations? We can all agree that we're looking at the intermediate time frame attempt to resume this trend because the 15-minute failed, correct? So we're looking at a few different ideas. Number one, we want this low swept. So I'm extremely cautious on any longs until that low gets taken. We're liking the lethargic movement. Why? Why are we liking the lethargic movement? Because we expected this to be what? Violencia. We didn't get that. That's important information. This is not noise. This is important information. Come on, baby. Daddy needs a pool table. 56.75, let's go. Wider stop. This is a higher time frame movement. Ooh. Oh dear. She breaks this high, we might get a change in order flow. Now, it could be building an SNDR as well. I think that's valid. But I'm leaning on the lethargic price action this way. I don't want to be early, but I do want to be right. We've got an internal sweep here. That's a nice, at least, movement back up into this. Okay, yeah, I could understand that. I suppose for a quick trade, you're either right or you're wrong immediately. Definitely not happy about this, however. What else happened? We're seeing higher time frame respecting of this movement. We'll probably go for another 7 minutes or so. We'll see. We'll see. We'll see. Hopefully this has been entertaining for you guys at the minimum. Right? So what I'm leaning on is that we had this happen. We swept, right? And yet we came back down and we couldn't even touch this candle. Yikes. Right? Yikes, yikes, yikes. Now, if we trade back up here, we would expect further down prices. If this wick here is respected, right? Strong selling pressure, trades back in. A little bit of weakness coming in. Okay. But we're starting to see higher time frame buying come in. Right? We didn't take this low, so again, if we're going to take this low, we needed to form an SNDR here, which means we wouldn't have gotten this. And the response to it, equally important. Trades back down, couldn't trade into this. Traded into the fractal where the buying started. Right? So for that reason, I'm actually concerned that we're not going to take this low at all. Right? This is a surprise bar up. And then the response is equally surprising. Because we wanted an SNDR form that's going to run this low. And then we've got structural reasons. We've got this. We've got an SNDR. We trade down. Maybe we build an SNDR here. We break it. We then trade back in and go. That's a valid idea, I mean. Right? So we're looking what goes on in here. All eyes are on this high intermediately. This was our last area of interest. So conservatively, you could wait for price to really tip its hand and snap this, assuming we're going to in bullish structure. We would. If we can't break that, we're not really in bullish movement. Right? So it's valid to assume that, you know what? You guys mess around in here. Once price tips its hand one way or the other, I want to be involved. Cool. Happy days. Take it easy, Nisnos. Aggressive sweep. Again, if you're very aggressive and you're looking at this movement, you're looking at the possibility that order flow flipped here bullish. And I think you'd be on the right side of things too. Now, this is a very aggressive way of trading. And if you're wrong, then you've got your 10-point stop or so. If, however, we're really looking at order flow, or confirmation trades, then we're waiting for this to actually generate something. Right? I think we can all agree we definitely don't want to see internal failure for the narrative of taking this low and continuing onwards. It's very dangerous times to be a bear. Right? Very, very dangerous times. Look at this. So we've now snapped that. Everybody piling in here. No. No. Whereabouts are we looking to trade from? What would be a valid idea? Maybe the validation candle. I think that's fair. Right? Is that a little too aggressive? Probably. We'll see what ends up happening here. If we sweep and fail this candle into our wombo and fail it, woohoo! Let's go. Right? We can all agree price has now tipped its hand. And that's because we failed to create an SNDR here. Right? I did like the idea of taking the 56, and now we're looking at getting in much, much higher. Oh. Maybe not 3x. Nasty business. into our manipulation leg, into our fractal. Gotta go, gotta go, gotta go, gotta go. Now this would be, let's go, you know what, let's just put it up here for right now. We'll look at it in a sec. We first want to manage this for sure, right? Spiking down into our wombo, but now trading back into the midpoint of this zone, right? Respecting it. We could look at this high, 901.5. That would be your first one. But yes, again, this is now a higher time frame failure. We should at least nuke this at 2050. We should at least nuke this at 2050. Let's see. Let's see. Do we take this low after we burn it? That's an interesting question. So, this is where things get fun, isn't it? Because we've got our manipulation. We've now broken this. Can we go break even? We can't. Can we? We need that attempt for the market to come back down. That's nasty, isn't it? So our protected low in reality is this here internally. 15 points. Right? So this is the attempt to go down on here, yes. So if we were in from here, now we've got the attempt to go down that's failed. If we're in from here, we need that attempt to go down to fail here. If we're involved here, say you're involved from 66.75 here. We got our push. This is your attempt back down. Oh, we just got stopped out break even, and now it ran. Right? If you're involved here, this movement up could trade back down and take you out break even and then run. However, if this traded up and then traded back down here and then continued, now you go break even on this trade. We haven't had that here. Does that make sense? There's your 15. Ideally, we get that body closure above 904.5, and then boom. Right? So we manage our positions based off of our location and our risk and our trade idea. That's right. That's right. So we're involved here. This is very different than being involved with Tom at 870 and Mikey at 66.70. Right? Very different. This is the confirmation trade. We've now broken structure, which means that we shouldn't close. Assuming this closes above here, we should not close underneath that. But that does not mean it can't trade back down and take us out. It's a very different concept. Right? Now, if you're relentlessly protecting capital and you're happy with your win rate and your expectancy on your system, then you're fine missing this and maybe you put that up there. Or you trail aggressively and you're just taking whatever. That's cool. There is nothing wrong with that. And now you're working on staying out of trouble and your win rate. And you're growing your account by 200, 300, 400 bucks a trade or 150 bucks a trade, whatever it is. Whatever it is, as long as you're increasing your account value. Cool. We talked about my ETF accounts that I just started. I'm not going to mention any S words, right? But they're up 6K, taking $200 to $300 to $400 trades over and over again. High probability. Per account, right? It doesn't need to be $4,000 trades. They're nice when they come, but we manage what we're doing. And this is why. We've now got a protected low. Low probability event that it gets swept, but it's still a probability event. In theory, we should be, well, maybe not even there. I think that'd be nasty if it came and swept us out. But my concern would be what? So if we're trailing our protected lows, it should be here, shouldn't it? Why would we consider anything else? That closure at 9:06 happened exactly at 12 o'clock. Here's your 15-minute time frame now. You just validated a low. Now we've got a fractal here where the 15-minute, it very well could. This candle could have just opened, traded lower, created an imbalance, and left, and then we come back down for that imbalance and continue higher. Cool. Happy days. Another possibility is that we come down into this now that we've validated a 15-minute low here above that high. We now trade back in to our area of interest based off of our intermediate time frame. Intermediate time frame movement down, which would facilitate what internally on our lower time frame? Possibly double bottom. Double bottom in the area that just validated your 15-minute. This is all fractal. And you're looking at the midpoint of that fractal being from this high to that low. Well, probably that low. I think that's your 15-minute low. Your 15-minute opened here, traded lower. Yeah. Right? So you got your high to your low. The midpoint of it, pretty much exactly where we entered. Shocking? Not so much. So when we look at this from an advanced sort of multi-time frame analysis, nobody wants this to come back down, but we have to entertain the possibility. Obviously, I want this to fly. Right? We just validated a 1-minute high. We should trade back into this zone. If we bounce from here, happy days. Then we can look at maybe adding in here. I would be very interested in that. I want to add to this position. This is going to go flying. Right? But I need that higher time frame trade back in, that failure, and then that rocket ship. And if I get that rocket ship, now we're really happy. And I definitely don't want to be looking at these highs. Yeah, I need this now to trade back in, and I want to see a higher time frame move. I want to see a higher time frame move. In fact, I want to speed this up a little bit because we're getting a little late. Right? So ideally, if it fails in here, then I'm really happy and I want to add. If it fails in here. Right now, we kind of got this lethargic movement going. If we make a valid low, then I'm interested. If we can't, then I still think this trade's a little bit lower. And again, I'm concerned because the 15-minute. So make a valid low, you schmuck. We've already given back 15, 20 points. And this is the danger when you're swinging for the fences. You have to be comfortable with these intermediate and multi-time frame movements. And that means that we've now given up, what? $500? Whoa, whoa. Okay. Swinging. Swinging. I'll add a third one onto this if we validate above this candle. right? The reason is because climactic action, if we fail underneath this internally, we've now continued to keep what? Bullish internal structure. Which makes it very important that we didn't have a valid low in here. We validate this. Let's go. Right? Now looking for a weak bear bar. Come on. Don't just run. Let me add another one. Right? Now we're break even. Now you got your intermediate time frame failure. Give me some form of weakness. Some form of weakness. This is just gone. This is just gone. I think we take, what do we look at? Right? So we don't have any 15-minute structure. We've got nothing. We've got those highs that we wanted. We've got our manipulation leg we haven't traded back into yet. We've already traded back into this zone that we just broke and left. We did that here. Right? So that high 2050, I think that's far too conservative given the price action. Man, oh man. Don't really have a lot other than really looking for to the moon, don't we? Get rid of that. Could look for a cheat code. That would be ideal. Here I am looking at this. I like this high. I think these highs for sure. I'll take one off above 20 and we'll kind of let this ride. Why don't we do that? That would have been a good spot to look for an ad, actually. Let's speed this up and see. Obviously, I wouldn't let this come back all the way. I think that I'm looking for some sort of failure in here with this higher time frame sponsorship. I'd be shocked if we traded back down to these 80s. If we get internal sweep and failure, again, you're looking at the personality of price. Here's your internal sweep. What do you think we get on a lower time frame? 98, 97, 75. Here's your adding opportunity, actually. Right? We'll take this one off when we get above 20. We've now building an SNDR, which is the idea. Sweep and failure, trading back in. Obviously, we're moving a little bit fast now, but looking at these 20s. Now, I think that we could probably move that up. Move that up. I wouldn't expect it to trade underneath there now. Ooh, don't do it. Don't do it. Thank you. Thank you. Here we go. Here we go. Here we go. We'll take one off. Pool table secured. Oh, that was close, actually. Let's put that underneath there. Happy days, happy days. Trading into these imbalances, that blasts up, that we go underneath this. Eight times speed doesn't really matter. We're looking at structural delivery, and we probably should be trailing quite expansively in here. Yeah, let's trail up a little bit further. This is probably going to take it now. I'd be shocked if it didn't. Woo! Get going, you good thing. Go on. Go on. Go on, go on, go on, go on, go on. What do we want? We wanted 78s, didn't we? Oh, no, never mind. All right. Let's see where we end up here. Trading back down to this area, continue on to these 70s. I like those equal highs we mentioned earlier. You might get an intermediate time frame mitigation of this zone here in the 90s. I think that's a little bit unlikely. Right? But I'd be looking to take a long out of this area as well. I think that lines up with your Wombo combo too. Shocker. Who could have predicted this? And get those 70s. Right? Get them 70s. We want those equal highs all the way up here that were taunting us from the beginning of the day. Oh dear, that's a little bit nasty. I think that's an internal sweep and fail. Ooh, that's nasty. If it breaks below here, I think we actually run quite a bit lower. This being an SNDR sort of area. Yes. Yeah, and we've got our manipulation leg, right? So we now traded back to this consolidation. This was manipulation left, trades back into the area of volume. We've now broken this area. I think we come back down, probably taking these lows. Right? Do we even get a trade back into it? We didn't. Yikes. Yikes. Oh! Spike, base. Do we get it? Or is this just going to be really nasty? There she goes. She just wasn't ready yet. Are we entertained? Look at that. Look at that. Entertaining. Fun stuff. What did we end up with? Oh, well. Garbage, eh? All right, let's stop this recording.